We all live in a yellow submarine. Yellow submarine, a yellow submarine. Well, hello. Today I'm going to talk about building a strategy, but more so the mechanics as to why you want to build a strategy in the first place. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers, and I am the overgrown child, no shock looking behind me, that is the Scruffy Trader. And today over coffee, I'm going to be having a little chat about building a strategy, or more importantly, planning a strategy. You see, I had a little question from the Discord group from Dusty Bin. And yes, Dusty, my music is not a plane crash. They've upgraded it from a car crash, by the way, to a plane crash, because apparently it is shocking.
Cheeky fuckers.
It is not. We have the Beatles playing, and everybody knows the Beatles is fantastic. So strap yourself in, it's going to be a ride next week with my music choices. Sorry.
Matron, take them away.
Anyway, his question was, how do you build a strategy? What are the drivers behind it? Because they're watching me build up a morning strategy in front of them. And I've been at it for 2.5 months. And if the truth is known, I've been at it for 6 months. Because I've been on and off with this for quite a while, but now it's starting to get together. So what I'm going to do is I'm going to jump on the whiteboard. I'm going to kind of break down my thought process in the way that I look at things. Because I genuinely look at things a lot different than the way other people do. And as time's gone forward, that has become apparent. I possibly overanalyze things. But for me, it's the only way. You see, whenever you're going to do anything, whether it's set a business up or in this case set a strategy up, you need an idea, and you need to know why that idea is going to be, but more importantly, how you're going to achieve it. And that's what I'm going to go through. So I guess the easiest way to describe what I'm about to show you is you start with the end game. In other words, where do you want to be, and work backwards. And the way you work backwards is you use a system, or I use a system of who, why, what. So let me jump on the whiteboard and I'll kind of try and explain what who, why, what is.
Well, we're waiting.
Okay, guys. So as I was saying, building a strategy. Right, it's quite a difficult question to answer, really, because of the way the industry is. The industry portrays trading as very simple. You know, X marks the spot. And you'll often hear me say, X does not mark the spot. And trust me, it doesn't. You know, and I see the adverts over and over. I've made 10 grand this morning. My student's been at this for 30 days and makes 4 grand a day. It's crap. It's all bollocks. Nobody is saying that you can't make any money from it. But what makes those quite horrible is the claims that they make. And the claims are just astronomical. I've done this a long time. I do not make £10,000 a day.
Are you serious?
I genuinely don't. If I do a couple £100, I'm fine. You know, am I wealthy? No. You know, do I earn a good living? Yes. But how did I get to that good living? Where did it come from? Well, it came from planning. And planning, as what I'm going to show you, has to be thought out. So the first thing that I needed to achieve, I wanted £200 a day, 200 quid. All right. So my starting point was 200 quid. But how do I get there? You know, and this is the whole point of this video. It's how you get from 0 up to 200. You see, when you watch the videos and one thing and another, it's, oh, I'll show you my strategy, this, that and the t'other. But what if you can't see that? You know, and you're not paying your £1,000 to buy a course that essentially you can get for free. Go on Baby Pips, take their course. It's about as good and as comprehensive as any paid course on the internet. It really is, you know. And if you want anything further than that, then it's just time. And if you haven't got time, it's a bit hard cash. And you can do that. You can, well, you could even enroll into sort of the Scruffy Squad and I'll show you what I do. But if you don't want to do any of that, follow what I'm about to show you, because all strategies work. And if you can't put the homework in as to why it's going to work, you're going to fail. So give it up, go work in McDonald's. You know, because this is a job and it is a career. And there isn't any well-paid career that doesn't have a foundation. And all those foundations come from planning. All right. So that's the basis of this. And it's what I want you to take away from this video. If you're not prepared to put the work in, you are certainly not going to get anything out of it. So give it up. All right. So let's have a look. So I want that. That is my starting block. But what is it? That is actually the end game. So I've started at the end. Now I'm going backwards. And I know this is going to sound, what? Don't get it. Well, you will in a second. So who, why, what? So who, why, what? So who is going to do this? And you'll sort of be going, well, it's me. But is it you? I know you're scratching your head thinking, well, yeah. Well, it's actually broken down into a couple of elements. Because you're either going to manually do this, you're going to have an EA do this, or you're going to have somebody else do this. So there's 3 elements you need to consider. For this case, we're going to say it is you. It's you, the person, that is going to do this. So that is easy. It is you. All right? Because we're not bothering with EAs, and we're certainly not going to be handing money over to an investment company. The next part is the why. Why is it me that is doing this? Well, it's because I want £200. The end game. All right. I want £200. But you might think, I want a car. So another why is a car. Or a holiday. And this will become apparent in a second. Why are they important in this equation before we've actually even looked at a chart? And I definitely know you're scratching your head now. It's because you need a goal. All of this is your goal. And if you have a goal, you have an end point. And if you have an end point, you can break it down into bite-sized chunks. So the next part of sort of the whys, the goals and everything is the time scales. Now, I want that, what we started at, in 1 day. So my goal is 1 day. All right. So what we've established up to now is I know what my goal is I know who's doing it, and I know how long it's going to take to get it. So it's a day, it's £200, and I'm personally doing it. All right. So that gives me the basis of a foundation. But the three elements of who, why, what are not complete, because we now need what. What do I have to do in order to achieve my goal? Well, I have to trade. Okay. But how can I trade? So that's the first part. So I am going to trade. All right. I know it's in a day, so that trade needs to be completed in 1 day. Okay. So how do I get to 200 quid? Well, this is where you start breaking down ATRs. So I know I'm going to trade, so I'm going to look at a chart, and on that chart I need an ATR. What's an ATR here, Karen? It's the average true range. And you'll hear me say, I'm not looking for the top third, I'm not looking for the bottom third, I'm looking for the bit in the middle. So if I'm wanting my £200 a day, I need to start breaking things down. Now if I'm at £1 a pip, I need to achieve 200 pips in a day. Is that possible? No. It's highly unlikely, unless I'm on a certain product. And that certain product could be the DAX. But then I have to ask myself, what's the chances of getting the top and the very bottom? Because the range of it's not uncommon for it to do 200. It's actually around 150 in a day. But it could be done. But could it do it every day? No, it won't. So my pound a pip is not really going to cut it. I have to increase that pound per pip. So now what I'm actually looking for in the ATR is the market. So the ATR, I'll just put mark, run out of space, gives me the market. Okay, and the market is something that is wide enough to give me what I need. But let's just say I can only find a strategy that can give me 20 pips. Just 20 pips. So that means I need a market that has an ATR of 60 and above. Why 60 and above? Because I can't get the top, can't get the bottom, I get the bit in the middle, which is 20. Okay. So that gives me 20 pips, or a third of the ATR. All right. That's brilliant. Now what do I need to do? Well, I know I'm at £5 a pip and I do 20 pips, that's 100 quid. So I need to do it twice. 2, 2 trades. And that's kind of the process as to why you hear me say I often trade once, twice a day. £5 a point, 20 pips at a go, gives you £100, do one in the morning, one in the afternoon, that gives you your 200 quid. And that's the first thing that I ever do. I break it down in such a way. You know, the first part of it, the who, is very simple. It's all, for me, it's always me, because I don't do a year's, and I don't really give anybody else my money to trade except me. However, there is a caveat to that, because I do. I use a mutual fund. I trade up on swing trades, and at the end of each month I draw that money out, I put it into a mutual fund, and I forget about it. And that is my pension. And I manage that fund as well because I pick the pots that it goes into and it's doing quite well. So that's my pension side. Then I can have another one. I have another pot, which is my car. And that's a 2-year plan because I look to change my car maybe every 2 to 3 years. You know, so I don't really need to be aggressive with it. It can take time because it's 24 months for me to cash that in. So swing trades. And then you come to your what's. How are you going to do it in the first place? I'm going to trade, I'm going to do this, I'm going to do that. And that's how strategies are kind of built if you look at it from my point of view. And all of this boils down to, well, you've heard me say it before, my favourite quote. And if anybody's ever followed me, you're probably going to know what I'm going to write on this board. And you are. So I'm going to give you that quote right now. It is, know thy self. That's how you build a strategy. Know thyself. It is the beginning of wisdom. So there's only you can answer these questions. What do I want? How do I go on to get it? It's that simple. So that's where the planning and everything comes from. But now you need to take it into the next stage. And the next stage is, how do you build a strategy in the first place? Well, you already know what you're setting out to achieve. You're going to be a day trader. Just by definition of what we've worked out. So how do you do that? Well, you need a fast market. So you're looking at cable, you're looking at DAX, you're looking at oil, you're looking at the Dow. All these products that move relatively quickly. If you don't know what they are, they're very easy. You just do a bit of research, pull up the ATR. Anything over 60 to 70 is a good day trade. Anything below that, by definition, becomes a swing trade. Then you need to know when you can trade. And you go, well, I can trade when I feel like it. Can you? What if you work? You can't trade when you feel like it. You might work, say, I don't know, 6 till 6. So if you're in the UK time, you're missing out all of the UK session. Right? So then you have to think, well, what products work best after 6? Well, you want to be looking at the US market if you're in the UK. Because they're still buoyant up to about 9 o'clock at night. Not as fast, but they are still got good opportunities. Or you look for 24-hour markets like oil. Oil will move through the night all the time. Or you step back and you think, well, this isn't really feasible. Therefore, I'm going to become a swing trader or an end of day trader to work around my job. And what I'm going to do is I'm still going to use the fast markets, but I'm going to put my orders in the night before and set and forget. So you need to start thinking along those lines. And if you're set and forgetting, looking at a 5-minute chart is a waste of time. You need to be looking at a 4-hour chart or possibly even a daily chart. And that way you'll start focusing your eyes into the way the market moves on a high time frame, and that'll help you. And these are how you build strategies, guys. It's not X marks the spot. It's the who, the why, and what is important. And very rarely you'll see the likes of
You ding dong!
talking about this. And why? Because they've never done it. They wouldn't even understand what it meant. What they do is they say, right, okay, I have a magical system. You have a 27.5 EMA. That is your baseline. And when a 7.2 EMA crosses it, you buy. This is amazing. And it looks amazing because the numbers are wild. You've never seen them before. So obviously they've done this amazing testing on it and it works. No, it bloody well doesn't. Put it on your chart. Put a wild moving average on and see what the difference is between standard moving averages. You'll be amazed how close they are together. And in reality, it's just a fable, it's just bollocks. You know, I watched one the other day jumping up and down because they use a 17 moving average. Put it next to a 20, there's hardly a difference. And if it's a standard moving average against an EMA, well, it's just negligible, pointless. But that's what they do, they suck you in. So standard settings are there for a reason, because they have been tested fully in the past. Now, when you're looking at oscillators and things like that, you can speed them up, slow them down for conditions. But 14 is the standard setting and it's normally pretty good. You know, it gives you a good baseline. But then you can have one that's set faster or even slower. There's a strategy out there called the whip. It's been around for years. And it's an RSI setting of 2. And it's called the whip because it literally whips up and down. Does it work on a 5-minute chart? No, not even close. Does it work on a daily? No, that's a different kettle of fish. Because your RSI might be fast, but the time frame is slow. So the two of them work in tandem. But if you have the two together, i.e. a fast and a fast, then it doesn't work. Because they're not working in tandem. They're working against each other. And that's how you build strategies up. Piece by piece. And the first thing you need to do is figure out what it is you want, how long it's going to take you to get it, and break it down into the smallest chunks. So, there you go. The idea of this video was not to show you the magic pill, because it's not really what this channel is about. This channel is about inspiring you with your own trading and maybe get you to think a little bit out the box. If you want to see how I personally trade and sort of see it in real time, check the Scruffy Squad out. Will I show you signals? No, not into that. But I'll show you how I do it. And then you can adapt it to your own means. It's that simple. So there you go, guys. I hope you've got a few thoughts. By all means, drop them in the comments below. I do like to engage with you guys, and I answer every single one of them. So there we go. Trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.